I ask this question a lot because I still don't think it's been explained. How did we price a barrel of oil so badly for 3 years?
The market prices it absolutely accurately according to the day's trading wishes. It's very volatile because so many factors intrude on the oil and gas industry. It's connected with everything. And whether it's politics or economic growth or the lack of it, or demand somewhere, or a new statement by a leading player, in the recent downward push in the oil price, there's been real evidence of Saudi intention to talk the market down because it wants to move some players out of competition with their market share, particularly US shale. OPEC's share of global oil usage has steadily dropped as non-OPEC producers have been increasing their production, and so the competition, the rivalry in the market is much sharper than it used to be.
This is a high-stakes blinking contest, and I bring you in, Ian, because I think of the politics in the Middle East. How long can these political establishments stomach $45 oil for?
Well, if you're talking about the Middle East, quite a bit, and I think the Saudis very clearly. You know, the fact is they don't want to see the Iranians as the key beneficiary. It's not just about shale, of course. It's also about, you know, sort of higher price producers that they don't want to see become geopolitically more important. So in that regard, not a problem. Same thing with Iraq. Massive problem in Iraq right now. They're fighting the strongest terrorist organization that we've ever dealt with, and yet they're also producing at 35-year highs in terms of oil because the territory that ISIS holds isn't where the oil comes from, obviously. Well, that's a government that the Saudis also see is basically influenced heavily, as Sir Jeremy knows, by Tehran. The toxic conflict in the Middle East right now, is geopolitically, is Saudi Arabia versus Iran, and that does lend you to the Saudis not wanting to play nice with the Iranians or their OPEC partners more broadly.
Jeremy, is that one of the interesting things of this, is that actually we can say it's a high-stake blinkings contest between OPEC and the US, but within OPEC there is significant fragile pieces and debates going on right there. How does that play out?
Well, the Gulf producers tend to stick together. Saudi is obviously the leader in OPEC, and particularly in the Gulf, because it has the most massive production, and it has normally played the role of swing producer because it can vary its production between 12 and 6 million barrels a day, if it wishes, by much greater amounts than others. But other players are beginning to move in on that. America, obviously, is producing much more than before, but Iraq, which is producing, as Ian said, just below 4 million at the moment, more than in previous decades, could produce, if everything was quiet around it, between 10 and 12 million barrels a day. There's an enormous potential there. So geopolitics stops the production capacity of major players hitting the maximum, but there's masses of oil and even more gas out there. We're a long way from peak in either product. So politics and the growth of the global economy has an enormous effect on supply and demand in the market.
Ian, what does this mean for DC and Congress? There was talk for a while that we'd be exporting oil. Where are we at in that political debate now?
There was a wild card. Obama might have thrown that in the State of the Union. He decided absolutely not to, didn't want to touch it. He's very much in, you know, leading the opposition mode in terms of versus Congress, so I don't see that. I do think that the willingness of Congress to play foreign policy, and we've seen this with additional sanctions against the Russians. We see this with Menendez and others talking about more sanctions against Iran. The willingness to invite Netanyahu directly to give a statement in Congress when Obama wasn't even told, right? That has the potential to bring a little bit more geopolitics into the energy price. What's so interesting about the environment right now is that geopolitics are actually more volatile globally than we've seen in decades, and yet they're having no impact on oil whatsoever. I don't think they're going to have a major impact on oil production, given that supply is precisely what the big driver is right now in the near term, but they could start playing a bit more, and Congress is one piece of that.
Yeah, Jeremy, outside of the politics, I look at this supply reaction and how flexible producers are. Talk a lot about the Gulf, how they can absorb a $30, $40 oil price. Have we underestimated US shale and how flexible it actually is?
Probably. It's well estimated now. But US shale, I mean, the remarkable thing about the US economy is that it is so driven by individual enterprise choices. And we can't predict those. People invest in particular areas according to the returns, and they can withdraw investment just as quickly as they've put it in. Some of the US shale producers are quite highly leveraged. And with lower returns coming out of lower oil prices, some of those bank loans may be called in. So it could vary by quite a lot. That's what Saudi Arabia is playing for. It's quite a high-risk strategy. Saudi Arabia, to achieve a larger market share long-term into the future, needs to bring the oil prices down very far, very fast, and then have a rebound with some people knocked out. But banks can cover that period if the leveraged producers think that they can hold on for 18 months or 2 years. They'll stay there. And then the Saudis won't have so much money to spend on their politics, which does come into it.
Jeremy, just very, very quickly, one final question for you. We talked about the pricing of the oil market back in June. Perhaps everyone was surprised, as you say, Ian, because the geopolitical risk just wasn't pushing the price up anymore. If we got that wrong and most people missed the huge decline, the stunning collapse in the price of oil, what are we missing now?
Oil price prediction has been a mug's game for decades. There's hardly anybody you couldn't spot who's got it right looking backwards. Just the occasional pundit you never listen to. It is a mug's game because there are so many factors. Geopolitics sometimes plays a hell of a role. Economics certainly does. You can't be sure what you're looking at because people make individual choices that are linked up in myriad ways. What will have an effect, though, is the return of demand to the global economy, particularly in Asia and in Europe eventually, maybe even Japan. That will make a difference. The oil price will come back, I think, quite sharply at some point.
Look, I think the issue of Asia being a beneficiary and the major beneficiary is great. And one point I would make strongly is that the single biggest, best piece of news that comes out of the oil price going down is that Xi Jinping actually gets time to continue his reform process, his transformation, without strong political pushback. That's the dog that hasn't barked. 2 years Xi Jinping pushing really hard, no domestic political pushback. Low oil prices helps him a lot. Boy, that's important.
Fascinating insight, gents. Thank you so much to Jeremy Greenstock and, of course, Ian Bremmer of Eurasia Group.